Welcome to the deep dive. Today, we're cutting straight to the chase. GameStop's Q2 2025 financials.
Right. Our mission is to unpack these results, figure out what's behind the numbers and what their guidance suggests for the future, all based on their official releases.
And it's quite a story this quarter. A huge swing, really, from big losses to, well, pretty impressive profits.
Definitely.
Net sales hit $972.2 million. That's way up from around $798 million last year, same quarter.
Quite a jump.
And the operating income, it went from a loss of $22 million last year to an income of $66.4 million now.
That's the really striking operational shift.
Yeah. And net income jumped even more dramatically, $168.6 million compared to just $14.8 million. So what's driving this massive change?
Well, a key piece here definitely is how they manage their expenses, specifically selling general and administrative costs, SG&A.
Okay.
They managed to cut those down significantly from about $271 million last year to roughly $219 million this quarter.
That's a serious reduction.
It really is. It points towards, real internal belt tightening, maybe store changes, better lease deals, supply chain tweaks, just doing more with less.
A much leaner operation then, but their cash balance also jumped out at me. It's huge now.
Oh yeah, the cash position is titles.
They've got $8.7 billion in cash, equivalents, and marketable securities. That's up from $4.2 billion. And get this, over $500 million of that is in Bitcoin. $528.6 million. For a retailer, that seems, well, unusual. What's the thinking there?
It is unconventional, absolutely. Having that much cash provides incredible flexibility, obviously. Yeah. For investments, acquisitions, whatever.
Right.
But the Bitcoin part, yeah, that adds a whole different dimension. It's volatile.
Extremely.
So it could be a speculative investment, maybe a hedge, maybe trying to appeal to a certain crypto-savvy crowd. It's definitely bold, but it adds risk.
Okay, let's shift to where the money is actually coming from. The sales mix looks quite different.
Yeah, there are some clear shifts happening.
Hardware and accessories are now the biggest piece, right? Over 60% of sales, $592 million, up from about 56% last year.
Correct. That's consoles, controllers, things like that.
And collectibles are also way up. $227.6 million. That's over 23% of sales now, compared to 17.5% before.
That segment's growth is really noticeable.
But software sales actually dropped, down to $152.5 million, only about 16% of sales versus 26% last year.
Exactly. And that mix tells a story, I think.
What kind of story?
Well, the strong growth in hardware, and particularly collectibles, suggests they might be leaning into their physical store strengths, focusing on tangible goods, maybe becoming more of a destination for enthusiasts.
Less focus on digital games where competition is fierce.
Potentially. It looks like a strategic move towards higher margin physical items and, that collector market, catering to a specific crowd.
And this focus might explain some other moves, too, like getting out of certain markets. You mentioned divestitures.
Yes, that fits the pattern. They sold off their Canadian operations this quarter.
Oh.
And they have plans to do the same in France. It seems like part of streamlining, cutting those SG&A costs further and focusing resources where they see the best returns, sharpening their focus.
Makes sense. Now, something you always see in these reports are adjusted figures, non-GAAP numbers. Can you quickly explain what those are for listeners?
Sure. So non-GAAP or adjusted numbers are provided in addition to the standard accounting figures, the GAAP ones.
Right.
The idea is to give investors a sense of the core operating performance by stripping out certain items management feels aren't part of the regular ongoing business.
Like what kind of items?
Often things like restructuring costs, maybe one-off asset impairments, or crucially for GameStop, those unrealized gains or losses on their Bitcoin holdings, which can swing wildly.
Ah, okay. So it smooths out some volatility.
Exactly. So their adjusted operating income was $64.7 million compared to a loss last year, and adjusted net income was $138.3 million. Still very strong, just viewed through that slightly different lens. Got it. So looking at this quarter, strong turnaround, leaner operations, big cash pile. But what about the future? What are they signaling? Is this sustainable? Well, that's where the standard cautionary statement comes in. Every public company includes this.
So forward-looking statements, bet.
Precisely. They lay out all the potential risks and uncertainties that could make future results different from, current trends or expectations.
And what are the big ones for GameStop?
The usual suspects are there. The overall economy, fierce competition, the cyclical nature of console releases, relying on suppliers for new products, tech changes, supply chain issues.
And the Bitcoin volatility, presumably.
Absolutely. That's explicitly mentioned as a factor. They're basically saying, look, this quarter was good, but here are all the things that could impact us going forward. It's not a prediction, just risk factors.
So wrapping up, a really dramatic improvement in Q2. Profits are up, costs are down, and there's a clear shift towards hardware and collectibles. A lot happening.
Definitely a transformative quarter financially. And that leads to the big question, really, with this huge cash reserve, the Bitcoin play, and the focus on physical goods. What's the long-term play here? Is GameStop carving out a sustainable new niche, or are they still navigating a very tricky market, something for everyone to think about?